The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone. Apologize that we're starting a little bit late. It's not my fault. The guys at Standard Bank had some issue and didn't manage to get things started at 12:30 on time. Nevertheless, let's get through it. It's, what is it, almost 1:45, so we're about 15 minutes late. So I'm going to get straight into this webinar and get through it, and we can hopefully still have some time at the end for questions. I'm happy to run it for another 15 minutes beyond 1:30, so that we get the full hour as usual. All right, so I'm going to look at the contents for this month's webinar as usual. The US factors that are important to keep an eye on, then some global indices, commodities, currencies, and then we'll turn it to the South African context, where we'll look at the South African indices and the South African top 5 stocks that make up our market. So here's a weekly chart of the S&P 500, and it goes back over the last 3 years.
Sorry,
Yes.
Garth, we can't see your screen. I don't know. I've made you the presenter. Just take a look at that quick.
Just see what's going on here quickly. Okay, that's strange. Let me just. Okay, there's usually a little button I get, Stuart, that says that I can share my screen, and I'm sure I did present that. Let me just.
Let me just. So what I'll do is, sorry, Ron. Let me just make. I'll just make myself the presenter. I'm just gonna. Sorry, Ron. If you can just give us a second while we hopefully sort this out.
There we go. Okay, show my screen. Okay, can you see that now?
Yes, now I can see your screen. Perfect.
Okay, all right, super. Let me just maximize this. All right, sorry about that, everyone. Let's carry on. All right, so here is the chart of the S&P 500 that I was mentioning. It's a weekly chart looking back over the last 3 years. And what you can see evidence here is that that upward trend that's been intact since early 2016 is still very much intact. And you can see the triangle pattern that has been forming over here over the last couple of months since the beginning of this year, and you can certainly see that a lot of volatility has come into the chart pattern over here recently. What's important is that this 2600 level has held as support, and it's been tested a number of times over the last few months, and it's continued to hold. Now, it does appear as if we're beginning to see a break to the upper end of this triangular structure here, which many people are saying is bullish. I guess you have to agree that it is bullish, provided a breakout can follow through to the upside. I'm just going to look at a daily chart here as well and show you, this is now more recent. You can see the trading activity for 2018 showing over here. And with the arrows at the lower end here represent the bounces off the 200-day moving average recently. And that 2600 area you can see there quite clearly has been support over the last number of months, albeit with a fair amount of noise around that area. But now we're seeing a break through the upper end of this downward trend over here. The breakthrough 2700 here is bullish, and that opens further potential for upside, which validates this triangular type pattern. There was a small gap as the market broke out through this triangular structure at about 2700, and so far that 2700 level has been retested and the gap has been filled and the market has moved up off there again. So for the time being, I think while above 2700, you've got to remain bullish on this chart structure and see the potential for a bit more upside. The first major area to target would be 2800, and if that could be broken to the upside, then 2875 was the prior high from earlier this year. Let's just see. I mean, this middle month, the middle months of the year are often quite choppy and difficult to trade and range bound. So we'll see, but I think ignoring any of that sort of bias, I think we've got to accept that this chart structure for the time being is more bullish than bearish, and you've got to give the slight benefit to the upside here still. All right, and then this is the VIX Index. That's the volatility index as measured by the Chicago Board Options Exchange. You can see the big spike up in volatility that we saw earlier this year, and that volatility has been subsiding a bit over the last month or two, and now we're almost back to return to calm for now, as I say. I don't know that I necessarily expect this calm to hang around forever. And I think what you do need to keep an eye on is this downward trend on the VIX. If that downtrend begins to get broken to the upper end, then it could introduce a little bit more volatility into the market. All right, then this is the US 10-year Treasury yield. And this has been a big talking point this year. I have alluded to it a number of times in previous presentations this year. And really it's a significant focus for our markets, given that we are in a rising yield environment. Keep in mind that when bond yields rise, that implies bond prices are falling. And some big names in the industry have suggested that we've now begun to enter a bear market on the global, well, on US bonds, put it that way. This graph tracks the yield on the 10-year Treasury note. And as you can see, recently it's broken above 3%. The numbers on the side on these charts, for some reasons, display as 30. That it should be 3%. Nevertheless, the small little break of that wedge pattern in late April, early May saw a break to the upside, and we're now seeing US 10-year Treasury yields above 3%, and that upward trend is undeniable. So for the time being, we still sit in a rising yield environment, and I've seen some targets of 3.5%, some even as high as 4%. So let's see. But do keep in mind that rising yields, rising interest rates are ultimately a headwind for equity markets. And it's just a question of at what point do we reach a tipping point in terms of where they become too much of a headwind and they really slow the equity market down significantly. All right, so that's the US factors. Let's now look at some other global equity indices. We look at the FTSE, the DAX, the Hang Seng, and the Nikkei. So here we've got our FTSE 100 index. This market has been remarkably strong over the last month, and well, over the last 2 months really. This is a weekly chart, so each candlestick pattern here represents 1 week worth of trading activity. And what's mainly driven this up has been resources shares, and particularly oil exposed names. The FTSE 100 is quite heavily skewed towards oil companies. It's got big names like Royal Dutch Shell and BP listed on it. So, and interestingly, if you go and look at the charts of all of those sort of oil related stocks, you'll see quite a similar technical pattern to what we're seeing here. We'll look at BHP Billiton later, which has got oil exposure. And if you did a chart of Sasol, you'd see the same, where it's basically formed this massive big megaphone type of structure. And it's now hit up against the upper end of that megaphone and is starting to see evidence of profit taking coming in. This weekly candle on the FTSE 100 so far, to me, looks like it's forming a shooting star reversal candle on the weekly graph. We'll see how things close tomorrow, but certainly as things stand right now, that looks like a shooting star candle up there, which probably signals that this rally's almost run its course and we're due for some consolidation now. We certainly have begun to see the resources shares coming off the boil a little bit over the last day or two. All right, and then this is the DAX, the German market. You can see the upward trend that was broken earlier this year. It pulled back to support at 11,800 and it's rallied quite strongly now. Now, the question I sort of asked for myself now is, does this rally just continue, or are we going to start to form the right shoulder of a head and shoulders pattern over here? And time will tell, I guess, whether that is the case or not. Look, if it starts to take out the prior high, then 13,500, then obviously my head and shoulders argument is totally off the table. For now, it's just something I think to be aware of. I'm not saying this will necessarily play out, but I think it's just something to keep an eye on in the months ahead. The potential for this head and shoulders to form here. All right, then here's our Hang Seng Index, and I've said it previously on these webinars that the Asian markets are generally looking quite good. Out of all of these global markets, the Asian markets are looking pretty interesting. Here's the Hang Seng. You can see a fairly similar sort of setup actually to the S&P 500. It's trended nicely higher since the beginning of 2016. It's now traded into this triangular type pattern over the last couple of months, and it's begun to break to the upper end. And here we just translate this into a daily chart, so it's a little bit more short term for you to look at. Here you can see again that triangular pattern more clearly illustrated here with a break to the upside. So in strict technical terms, that triangle breakout is bullish, and it should point to further potential for upside on the Hang Seng. First area to target would be around about 32,000 there, and if it was to break that, then possibly a retest back to the prior highs. So for the time being, and whilst it holds above the 50-day moving average there, I think one has to remain relatively optimistic for the Hang Seng as things stand at the moment. All right, then this is the Nikkei, the Japanese market. Last month when we met, I said that it had formed this falling wedge pattern that had begun to break to the upper end. And in strict technical terms, that also points to a potential for the market to rally back to the prior highs. As you can see here, you still have a clear pattern of higher lows and higher highs evident. So there's nothing telling me that we need to get worried about this upward trend at this stage, and there's a reasonable possibility still that the Nikkei goes up and retests these prior highs at about 24,000. So, the Hang Seng and the Nikkei both, to me, look quite appealing from a technical perspective when looking at all of the global indices. All right, then let's look at other markets, our gold price and then the commodities, specifically gold price, platinum, the Bloomberg Industrial Metals Index, and then the crude oil price. So here's our gold price chart. It's same old really. It's been a bit weak over the last 2 or 3 weeks. It's broken below $1,300 an ounce, which is a break below the bottom of the range that had been intact for all of 2018 up until quite recently. Now that to me opens the door for a potential weakness down to about 1265. That's where this uptrend from the beginning of 2016 comes into play, and I would be interested to see if we get some sort of a reversal up off that area, and that then may well open the potential for another bounce to the upside. It would need to break above 1360 on a longer term basis in order for the price to move out to make higher highs, to really make a bullish setup. But I think for the moment, you do still have the rising trend intact. So I'd be interested in possibly looking at buying gold into further weakness towards that 1265 area if it gets there and if it reverses up from there. Right, now this is the platinum price. Nothing much has changed here since last month, really. It remains very range bound. You can see the lower end of the range at $880 an ounce, the upper end at about $1,025, and that has been the case now for a year and a half. So very, very range bound. It has reversed up off the bottom of that range this week. If you look at that weekly candle that I'm pointing out there now, that is a reversal candle for the time being. So that does maybe give us a bit of a hint that maybe it's going to bounce. I suppose it would need to break this downward sloping channel that's been intact for the last 3 or 4 months in order to open any further potential for a move back up towards the upper end of that trading range. But broadly speaking, it's still just range bound at the time, at the moment. All right, and then this is the Bloomberg Industrial Metals Index. I always mention this because it's a nice one to focus on. It doesn't contain any precious metals, doesn't contain things like oil. So it's all stuff like zinc and copper and those types of industrial metals, which are useful for analyzing a lot of the resources stocks on our market that are exposed to those types of commodities. You can see here the upward trend is still very much intact. There's no question about that. This remains a bullish chart set up for the time being. Notice how each time this index has pulled back towards that upward trend, it's found support and it's moved higher. So for the moment, there's nothing to question that upward trend. It still looks quite bullish in my eyes while the trend is intact. And then this is the Brent crude oil price. So it's really gone strong over the last couple of months. I must say it's surprised me a lot that it's been as strong as this for myself, and I suspect a lot of other commentators as well had the opinion that oil was probably likely to hang around between $40 and $60 a barrel, just given the additional supply in the global oil market that's come on stream over the last couple of years. And I never really expected that it would go back towards the higher levels. I didn't think we'd ever see oil back above $100 a barrel. Not that it's there yet, but it's, the chart is looking very, very bullish at the moment. Oil currently trading at around about $80 a barrel. And you can see that upward channel is still very much intact. And whilst that is the case, one has to remain fairly bullish on oil. And obviously there are some supply disruptions in the system at the moment, which I suppose are helping to push the price up, certainly in the last few weeks anyway. All right, then let's take a look at some of the currency markets. So I'll look at the US dollar index, the euro dollar and the pound dollar, and then the rand, of course, the rand against the dollar. So here's our US dollar index. I always go back quite far on this chart, back 10 years or so. Just the reason I do that is to illustrate the significance of this 88 level on the technical chart over here. And you can see last month I pointed out the significance of 88 and the support. That was the lateral support from 2008 and 2010 previous highs. And then, of course, it's this upward trend that began in 2011 through 2014. And all of that multiple support area came in at around about 88. Now, it has held in the last month, and we've seen the dollar actually moving up quite swiftly over that time. The dollar has gained about 5% or so in the last month. So it's been a pretty strong move up for the dollar, and consequently that has also resulted in other currencies weakening. So you've seen, the rand has weakened partially on the back of a strong dollar, and here again, look, you've got dollar euro as well. You'll see how the euro has also weakened against the dollar over the last month. Last month when we chatted, I said to you, watch this big triangular structure. It could break either way. My sense was that it was going to break to the upside, but I got that wrong. It's actually broken to the downside, and the dollar has broken stronger, implying a weaker euro. Now, this dollar-euro pair has moved back into this congestion zone over here between about 116 and 119. So I would expect that this dollar rally probably starts to sort of exhaust itself a little bit in the short term, and we could see some stability starting to form over here. On this dollar-euro pair. Similarly with the pound, I also got this one wrong last month. I think I said at last month's webinar, it was looking, I thought this trading action of the last 4 months or so looked extremely similar to what we saw in the latter part of 2017, and that we were about to embark on another leg higher, another leg stronger in the pound. As it turned out, that was wrong, and you can see the market broke below that upward trend. Now, in strict technical terms, that my view became wrong when it broke below 140 dollar pound, and you can see that the dollar has strengthened, the pound has weakened quite significantly over the last month. It's almost, we're talking close to 1,000 basis points of weakness that we've seen in the last month here. It's a very, very big, and that's a huge move in a developed market currency pair such as the dollar pound pair. And as you can see, the pound has been quite weak of late. All right, then let's look at our rand dollar exchange rate. This is the chart here. It's a daily chart. You can see this big saucer bottom pattern that has emerged over the last couple of months. So the huge strength that we saw in the rand in late 2017 and into early 2018, all around the Ramaphoria and all of that excitement, that seems to have abated for now. And the rand has begun to turn a bit weaker. The break above 12 Rand 20 on this currency pair was quite significant. And I think at last month's webinar, I said, watch 12.20. If that was to break, that would then open potential for further weakness in the rand. And we got that. It moved out from 12.20 quite quickly. It went to about 12.75, that sort of area. And now it's had a pullback to retest 12.20 again, and it's rallied up off that level. So for the time being, the way I see it is 12.20 remains a significant technical level, and the trading activity seems to be sandwiched between the 50-day moving average, which is that blue line over there, and then the red line, which is the 200-day moving average. And so you're looking at a trading range of about 12.20 to about 12.75, that sort of area. If it starts to push out above 12.75 convincingly, then it's probably going on to the round number at 13 to the dollar, and possibly weaker. But let's see. For now, it seems like some range bound activity, as I say, between 12.20 and 12.75 looks the order of the day for the time being. Right, then let's take a quick look at some of our South African indices. I'll look at the top 40, the industrials, resources, financials, the golds, and then the general retail index. So here's our top 40 index on a weekly basis. You can see the sideways activity that was evident throughout the 3 years, 2014 to 2017. Very dull, boring kind of markets. It's broken out in the latter part of 2017, and that's for the moment on a weekly graph. The top of that previous trading range remains now as support. It comes in at about 49,000 on the index. and for the time being, it appears that that support level has held, and we're seeing the market holding above there. So mildly bullish, but when you look, I mean, I'll show you the more recent chart. So now this is the daily chart here of our top 40. It's still, yeah, it's a bit tricky at the moment. I mean, look, in the last month, it's been very, very range bound, very choppy, quite a boring environment actually. But having said that, the index has broken above this upper end of the channel over here that I'd identified last month. But as I say that as well, it's also broken below this recent little upward trend as well. So it's a bit tricky to say whether I want to be bullish or bearish on this market at the moment. I think we need to see what happens into any further pullback here towards about, let's say, 50,000 or 50,500. That sort of area on the daily chart is quite significant. And if it holds that and reverses up off there, then then maybe we've got a chance at a bit more upside. But if it fails and falters and comes back inside the channel, well then, then it could point to another period of weakness to come. So, like I say, it's a bit tricky to know whether you want to be bullish or bearish on this right now. Let's look at some of the other indices. It might also help you to see the picture a bit more clearly. So this is our industrial index. Here, the downward sloping channel is still very much intact, and the upper end of that channel has held as resistance over the last week or so, and there's quite an important zone of lateral support here on your industrial index at 73,800. You wouldn't really want to see that lateral support breaking, because if it does, then the chances are we could actually see this market come back and even retest those lows that we saw in the beginning of April. So we're at quite a critical junction here on the industrial index. Would not like to see it breaking below that dotted line. Ideally, it needs to move up, but I'm a bit skeptical as to whether it's going to hold that level or not. I suppose we just have to monitor it in the days ahead and see what happens. All right, then this is the resources index. Remember on the FTSE 100, I mentioned that megaphone structure, and I said you would see it again elsewhere in some of these charts. So the resources index is exhibiting a very similar pattern, as you can see here, mainly driven by BHP Billiton, which has a massive big megaphone structure as well. Sasol has a similar megaphone type structure. Now it's reversed off the top of that megaphone pattern in the last 2 days and begun to come lower. So my sense from here is that we're going to see further consolidation in the resources from this point onwards. I don't know if it pulls back as much as a 50% retracement or even a 61.8% retracement. You can't rule that out. As much as this looks exceptionally bullish at the moment, you can't rule out a fairly deep pullback in this index for the near term or in the coming weeks or months, let's say. It is a volatile index by its nature, and as much as it's had a very, very strong run recently, you can't rule out the potential for a fairly deep pullback either. So we'll monitor this very carefully, but for now, I kind of get the feeling that this run in the resources shares is over, and we're going to see some consolidation and some pulling back in the weeks to come from here, I reckon. All right, then this is the financial index, the FINI 15, so it contains banks and insurance companies predominantly. Here you've got a critical support area at 16,800. That's a lateral support zone. It's also where the 200-day moving average comes in, as you can see over there. That's that green line. Last month on the webinar, I said watch the 18,200. That would be resistance, and it held perfectly where that dotted line is, and it's come down and it's now retesting the lateral support here. Obviously, many of you will see a big head and shoulders pattern over here. Let's see if that validates or not. I do get a bit wary when we see very big head and shoulders patterns like this. I get a bit skeptical as to whether their downside targets will be met or not. I prefer to see a head and shoulders pattern that forms over a relatively shorter time frame, like a month or two. But anyway, let's see. We wouldn't want to see this market breaking below 16,800. That would potentially open the further weakness in the months to come. So monitor this very, very carefully for the time being. All right, and then here's our gold mining index. It just continues to look terrible. Last month, I think I did point out the sideways range that we saw in the gold mining index, and wasn't sure whether it would break up or down, but within the context of a broader downward trend, one would usually expect a break to the lower end here. There was actually a small false break to the top of that range. Mainly it was caused by a movement in the Anglo Gold share price. And if you go and look at Anglo Gold's price, you'll find that the charting action is actually very, very similar to this gold index. So you got the false break out the top of the range there, and then the move back inside. And just in terms of a little bit of technical education, when that sort of thing happens, where you get a sideways range like this, and you get a break in one direction out of the range, and then it's a false break and it comes back inside the range, invariably what you do find then is you get a fairly violent break in the opposite direction throughout the opposite side of the range. And that's exactly what's happened over here in the past few weeks now. You can see how this gold index has broken out the bottom of that trading range and moved quite violently to the downside here. I don't know where it stops. I mean, this thing is now sitting at about a 2.5-year low, this index. So, really doesn't look good. It still looks pretty bearish to my mind. All right, and then this is the general retail index. Here again, you can see how that excitement and the Ramaphoria that was with us at the end of last year and into the beginning of this year really has petered out. You know, this retail index has a big rounding top type of pattern to it. And you can see the price has broken below some important lateral support here. That sideways line there at about 8,300 is important lateral support. That's been broken to the downside. And to my mind now, this opens potential for a move down to the 200-day moving average, which is at around about 7,500. And I think that's where we're going on this retail index. And then we'll have to see from there whether we can catch a little bit of a bounce or not. I suspect you might agree that, you know, a lot of the excitement around Ramaphoria and the expectation and the optimism and all of that we were so excited about earlier in the year hasn't really translated into anything much on the ground as yet. I still expect that it might going forward, but it just seems as if the broader economy has been a bit sluggish to catch up and to actually translate all that optimism into anything concrete on the ground at this stage. And I suppose that's why we are seeing some of these domestic sectors looking a little bit tired now and showing these rounding top type of patterns, very much like we're seeing on the retail index over here. Right, then let's quickly take a look at our top 5 heavyweight stocks. They're the same stocks this month as last month. Generally they are. Sometimes you'll find number 4 and 5 can move in or out of the index depending on what happens. But this month it's the same stocks as previously. So we've got Naspers in first position now, making up 22% of the index. Billiton almost 10% of the index. Richemont also close to 10% of the index. Then Anglo American making up about 5% of the index. And Standard Bank making up just about 4% of the index there. All right, so let's take a look at these charts individually. Naspers over here looks rather similar to the industrial index, as one would expect, because it's the biggest component of the industrial index. You can see how there's downtrend resistance over here at around about 3,300 Rand per share. There's some horizontal support at about 3,100. So it needs to, you know, at the moment it's trading between those levels. Support at 3,100, resistance at 3,300, and we'll need to see which side of that little range it decides to break, and that'll then open the next move. If it is able to break out above 3,300 Rand, then that'll be bullish and should open further upside. If it can't, and if it starts to break down underneath 3,100 Rand a share, well, then it's potentially going back down to the lows that we saw in April. So let's monitor this carefully, but it is obviously the biggest stock in our market, so it's a very important one to keep an eye on. Then Richemont over here, it's broadly been fairly bullish over the last month to 6 weeks. This 115 Rand level was an important resistance to have broken through in April. It broke out, came and gave a retest, and then continued to rally. It's been pretty volatile over the past week. It came out with numbers last week which missed the market's estimates a little bit, and they've talked about doing watch buybacks and all that sort of stuff to try and reduce the amount of stock that's out there in the market. But for all intents and purposes, from a technical perspective, this area at 115 Rand remains quite important support, and for the time being we'll respect that. And if the stock does manage to reverse up off that level, then you probably find you could take a speculative buy to just try and trade this relatively volatile range that is evident over at the moment. Okay, and here's BHP Bulletin. Again, I talk about this megaphone structure, and you can see it quite clearly illustrated over here. So there we have the upper end of that megaphone, which comes in at around about 300 Rand, and it's begun to turn lower from there. You can see an evening star reversal that's formed up there. The evening star reversal is where you get an up day, then a doji, then a down day, and that's what we've had over the last 3 trading days over here. Now, it's very overbought. It's reversed off the top of that megaphone structure. So for me, I think it's probably coming back down and going to retrace and sort of consolidate some of these recent gains. And like with the resources index, I said I don't know how deep it pulls back, but if it was to give a 50% retracement of this huge rally, then it would bring the price back down to around about 260 Rand per share, or 255, somewhere around about that sort of area. So I think for the time being, the rally in these resource shares are over, and I think we're going to see it coming off a little bit from here. All right, then Anglo-American, last month I spoke about this sideways trading range between 265 and 305. It broke to the upper end. You can see also there was a perfect textbook little triangle pattern that formed at the end of April and into early May. Notice that I've pointed it out there with waves 1, 2, 3, 4, and then the 5th wave is always the one that breaks to the upside. So the break above 305 Rand was bullish. That area, theoretically now, 300 to 305, that sort of area should potentially act as a bit of support now into a pullback. So I think just keep an eye on that. If that fails, then also your 50-day moving average down here at about 295 also presents a little bit of support as well. And then here's the chart of Standard Bank. So it broke this upward trend that was evident, I think last month when I spoke to you. I pointed out that there was this little channel in March, April that had begun to break to the upside and said that was quite bullish. It didn't follow through much to the upside. Instead, it faltered and it came lower. And it's actually now broken below the upward trend of the last 6 months, and also now begun to break below 210 Rand, where there was some fairly significant lateral support. So from a technical perspective, that break below 210 now opens the possibility of further weakness down towards, I would say, down towards the 200-day moving average here, which is at 190 Rand, and then down even further, possibly down to 185 Rand, where there's some lateral support in that sort of area. So I think for now, whilst below 210 Rand, sort of mildly bearish in the short term on the share price of Standard Bank at the moment. All right, that's it. I've done quite well with time, I think. It's 1:15. So yeah, so let's take some questions now and see how we go with that. There's a disclaimer if you've got good eyes and you can read that. I'm going to bring my charts onto the screen over here so that you can see what we're talking about. And I see some questions in the question box already. So if you guys can pop any questions you have into the questions box, I'll deal with them. I've got one so far from Andrew Seema. He's asking me to show my thoughts on Kumba iron ore. So here, I must say, Andrew, I was getting a little bit excited about Kumba earlier this week, or even late last week. It looked as if it was going to try and break above the upper end of this little trading range here. It's really been stuck between 265 and about 295, call it maybe 300 just for the round number. And it was making higher lows every day, and it was looking to me as if it might have the propensity to actually try and squeeze out the top of that sideways range. It unfortunately hasn't followed through, and you can see yesterday's candle was a big candle to the downside, which you could now possibly argue that there's a little rising wedge here that's begun to break to the downside. And if that's the case, then it's probably going back down into the bottom end of that trading range. I just want to see where it's trading at the moment. There we go. It's trading 287 right now. So yeah, similar levels to yesterday's close. I think for the time being, I'm probably neutral, even slightly cautious on this chart right now. If it had managed to hold above 300 Rand, I would have gotten more excited. But the fact that it hasn't, and that it looks as if that move above 300 was a false break, suggests to me that it might actually now start to come lower from here. So I'm a bit cautious on that. All right, then Rene asks about Discovery. So here's your Discovery chart, Rene. So yeah, when I looked at this, I noticed a fairly meaningful upward trend the other day, which one can't ignore. There we go. It goes back to late 2016. That trend joins all the lows. It's holding the 200-day moving average for now. I don't know why. I just somehow get a little bit of an uneasy feeling. I get the sense it's almost not going to hold this 200-day level and it's going to go a bit lower. They've got some lateral support down here at about 155, and then a little bit more support at the round number from those previous highs at 150. So and the other thing also is that the fact that it's broken below this zone of a little bit of lateral support here at about 167 and is now establishing itself below that suggests to me that it might still have a little bit further downside to come here. So 150, 155 is where I think it could possibly go. And if it manages to hold that level, then possibly it stages a little bit of a bounce from there. That's my gut feeling on it. All right, then somebody asks about Sasol. Okay, so Sasol, this is, I spoke about that broadening pattern that we saw on BHP Billets, and now you can see it very clearly here on Sasol as well. Here we go, something like that, right? So notice how it's reversed down off the upper end of that channel, off the upper end of that megaphone structure, sorry. A perfect shooting star candle there on Monday this week. And I must say, when I saw that off the top of this megaphone, I thought, yeah, this rally is finished. These shooting star type candles very rarely fail. They usually are quite a good indication of a top, especially when you get them at the end of a big rally like we've seen here. So shooting star is where you get a long tail to the upside, indicating that the buyers were unable to sustain the price at the high levels and the sellers took hold on the day. So with that being the case, I suspect we're going to see more consolidation in the share price of Sasol here in the near term. If we have to measure this big rally that we've seen over the last month or two and put our Fibonacci retracement levels on, I think 450 is a level where it could find support, but other than, if not there, then down here, the 50% retracement around about 440 would also potentially line up some interesting support down at that area. But for the very near term, I think Sasol's probably going to consolidate, maybe even come a bit lower. All right, then Doe asks about Mediclinic. You asked for MDC. I presume you're asking about Mediclinic, which has now changed its share code to MEI, Doe. Now, I just need to check the price because I know it is trading lower today following results that were a little bit of a miss. Yeah, it's trading down 7% at the moment. So that's down 8 Rand on the day. It's trading at 105 Rand 51. So if I had to just draw in a sort of a possible candle for today, it would look like something like that to take it down to about 105. When I was chatting with my colleague Andrew that I work with earlier today, we were actually saying this could be a bit of a 3-day rule where you get 3 days of fairly heavy selling. It stabilizes on day 3 and then it begins to bounce. So I think keep an eye on this one. You know, what have we got here at about 102? There's a little bit of support there. And I suspect that will probably also be like a 50% retracement of this recent rally. Let's just measure that and see. Yeah, more or less. So 50, between your 50 and your 61% retracement. I think a pullback towards 100 to 105, let's say, in that area. If you start to see stability emerge there, then I suspect you could possibly buy it for a bit of an oversold bounce from that level. But I do think you might have the potential for 3 days here. So today's day 1 following this week result, and then day 2 would be tomorrow. So maybe Monday you see some stability, and that might be the day to look at trying to buy it for an oversold rally. Right, then Capitec. Somebody asks about Capitec. Right, so here's the Capitec graph. I must say, when I look at this graph of Capitec, I just kind of get the feeling it's going back down to 800 Rand. It's not holding up all that well. It's trading below the 50-day moving average over here now. It's below this trend line support that I've drawn in there. You can see the long tails to the upside on the candles recently. It's suggesting selling activity is evident at the upper levels. So I must say, I think it's going back down to 800. I really do. And I can't get too excited about this chart in the near term. All right, that's my view on that. Okay, EJ, you're asking Capitec for the long term. Yeah, I mean, I'm neutral at the moment, I think. Now, the stock has derated somewhat. Obviously, after those the Viceroy report came out in January over there, you can see that was where the share price took a big hit to the downside. And even though it seems like there's probably not much substance to what Viceroy is saying, I think what it did is it gave the market a bit of a wake-up call and said, why is this share trading on an exorbitant PE multiple, so much higher than all of the other banks? I mean, yes, the growth is faster and all of that, but it was a bit too richly priced. And the market seems to have re-rated it, or derated it down, should I say, by about 20%, which is probably a more reasonable valuation for where this share should be trading. So I'm kind of neutral on it for now. All right, then someone asks here, would you look at Exaro? So let me look at Exaro for you. All right, so this is the chart pattern here. Yeah, look, I mean, the move above 115 Rand was bullish, and the fact that you had higher lows evident before that was suggesting that you might see a push to the upside. We got that now. It's pushing up. It's the underneath of the 200-day moving average here at about 135 presents a bit of resistance. I also suspect this downtrend. Yeah, that downtrend from January also comes in around about these sort of levels. So I think it's probably done a little bit too much for the short term, and I won't be surprised to see if it pulls back a bit and consolidates a little bit from here in the near term. I kind of get the feeling, like with all these resources, I think that Exaro has maybe done its thing for the time being, for the short term anyway. All right, then please can I comment on MTN? That's from Chris Prince, MTN. Right, look, it's sold off quite sharply recently. When you look at this chart from a sort of zoom out on it, like I've done here, what you can see is that it's very much sideways, but it is a stock that you can trade on the extremes, and you can fade the extremes here. So broadly speaking, we've got a range between about 110 and 135. I think if it comes to 110 and holds that level, you can probably buy it. Let me just see where it's trading today. Chris, I'll look for you now. It's trading at 113 Rand 50, so it's down a little bit more again today. Yeah, I mean, I think if it gets to 110 and it holds there and reverses up from there, you can probably buy it for an oversold bounce back up into the middle of this trading range. I think looks okay on that basis. As I say, that's the strategy you need to employ with this stock. You need to basically trade and fade the extreme. So don't get too bearish at the bottom end. Rather look to buy, and at the same time at the upper end, don't get too bullish. Rather look to short. That's the way I'm seeing MTN for now. Okay, then someone, Doe and Reynolds ask about BTI, British American Tobacco. Yeah, it's really been clobbered hard of late. A lot of these sort of consumer type names, not that this is entirely consumer, I mean, it's tobacco, but these sorts of stocks, Anheuser-Busch is another example, have all been hit very, very hard of the last little while. I do suspect that it's probably at an area now where it's going to begin to stabilize. Funnily enough, I was actually looking, in fact, I think I've still got it. Yeah, there we go. I was looking at the long-term chart of BATS in London before we did this webinar, just to try and understand where some support might come in, because I actually own this in my long-term portfolio. I bought it recently. I'm slightly underwater on it. And if you look, this is a weekly chart of BATS in London now, and you notice how the significance of this area of support at around about 37 or 38 pounds, where that horizontal line comes in. There's huge amount of congestion in this zone, even down to 35 pounds. So my sense is that you'll probably see British American Tobacco stabilize from here. I don't think it's going to go bouncing aggressively higher in the near term, but I think you'll find that it's a lot of the weakness has now happened, and the share price is probably going to find some stability around these sort of levels for the foreseeable future. That's my feeling on it at the moment. Okay, there aren't any other questions in the question box at the moment. I don't know if we've got some time, so if there are other questions, I'm happy to take them. Whilst I wait and see if there are any other questions, there we go, Bidvest. Let's have a look at Bidvest. All right, here's our Bidvest chart. Also pretty range bound lately, between sort of call it 250 at the upper end, and then you've got about 215 Rand at the lower end here. Like with a lot of the domestic stocks, it was all fired up late last year, and it seems to have kind of gone to sleep a little bit now. I wouldn't want to see it breaking this 215 area. Then it probably brings the 200-day moving average into play, and that would be at 205 Rand. Let me just look where it's trading for you today. Give me a minute. It's trading at 215 Rand 50, so it's holding that level for the time being. But if it starts to break below that lateral support line there, then maybe we see a visit down to the 200-day moving average. I must say a lot of our domestic stocks, I've noticed, they're sort of rolling over. They've all gone and they're starting to test the 200-day moving average in lots and lots of instances of domestic stocks. So I won't be entirely surprised if Bidvest also does that. All right, then Reinet. Right, Reinet. Sorry, RNI. I'm putting the wrong code in. Old habits die hard. RNI. I think what I said about British American tobacco is relevant for Reinet as well. Obviously, keep in mind that Reinet's biggest asset is its holding in British American tobacco. So if I think that British American tobacco is going to stabilize and just generally form a base now, then I think it's fair to say one can expect the same thing out of Reinet. So that would be my answer there. All right, then a question on Caterpillar and Boeing from Gerhardus in the US. I'm going to just come back to that just now if we've got time, because I don't actually have those US charts on this platform that I've got in front of me right now. So I'll come back if you don't mind. Then Alex asks me my view on Barclays Africa Group, BGA. Yeah, I mean, this chart really doesn't look great. Out of all the big four banks, this one is looking the weakest at the moment. It's through its 200-day moving average. You can see this big head and shoulders pattern evident over here. I'm not quite sure where this thing bottoms out, actually. I mean, in strict technical terms, that head and shoulders pattern projects a move all the way back down to the lows again, back down to like 135 Rand. You can't say that that's not going to happen. It's possible, you know. Stock is on a big yield, but I must say out of all the big banks, ABSA, Barclays is really the one that brings up the rear and doesn't excite me very much. I think while it's below 170 Rand a share here, downside still favors, the bias still favors further downside, I think. So yeah, it's not looking too great on my charts there. Okay, then Jasper asks me about Barlow World. All right, so Barlow's has done what a lot of these domestic stocks have done, and what I was talking about, where it's come and tested its 200-day moving average now, and that's at about 150 Rand per share. And I suspected all along this was going to happen. It's just been forming this really big rounding top. You've got this sort of lower highs all the way through the last couple of months, and I suspected that at some stage, once it broke through 160, then it was just going to be a hop and a skip down to 150, and that's what it's done now. So it's testing that 200-day moving average. If I'm not wrong, I think it's down a bit more today. Yeah, it's down another 5.7% today. It's trading at 140 Rand at the moment. So if I was to draw today's daily candle in, it would be something like that. I know that it did come with the numbers were a bit weak, and that is what sparked this as well. Possibly it could also be one of these situations where there's a 3-day rule here, where today I think is day number 2, and maybe you begin to see a little bit of stability. There is some support here at 140, but you know, I think for now, best case scenario, you get a reversal and a bounce and some stability that comes in, and then it maybe catches a bounce back to 150, maybe 155 at a push. And that might be a trade there. But I mean, broadly speaking, to my mind, this is not a great looking chart. You know, a lot of them are looking like this. If I show you Imperial, it's the same sort of pattern. And Bidvest we spoke about, but that also, you know, also rounding top of setup. Some of the other banks, your First Rand also testing its 200-day moving average. Discovery, we looked at testing 200-day moving average. So a lot of these domestic stocks are looking similar in the sense that they're all a bit weak at the moment, and they're all sort of trading around their 200-day moving averages and threatening to break below. Right, so that was that. Okay, someone else asked about Barclays. I've done that. Okay, lots of talk on YouTube about an American market crash coming at the end of 2018 and 2019. Any thoughts on this? Is this loose talk? That's from Chris. So Chris, yeah, I mean, look, you are always going to have those out there that are calling for a market crash, but you're quite right. There has been a lot of talk about it, and particularly end of 2018 or into 2019. And I am wary of it. I think what you've got to watch for is the possibility of a recession in the US. So for now, there's no indication that the US is about to go into a recession in the immediate future. But there's quite a lot of readings beginning to suggest that the next recession in the US could begin in mid-2019. And if that's the case, you know, all of the previous US recessions generally have resulted in a weaker stock market. So from that point of view, I am wary. And also do keep in mind that the stock market is forward looking. So if your recession comes, the market will probably begin to factor that in about 6 months earlier. So yes, I am wary, and I am wary for late 2018 and into 2019. You know, in my personal investing, I am relatively cash flush at the moment, only about 60% invested, 40% in cash. And sometimes I wonder whether I shouldn't even upweight that cash holding, because I do think that it's coming, but it's not here yet. But as you say, lots of talk about it possible peaking out in the market in later this year. And the other thing I think also to keep in mind is the fact that this big volatility that we saw earlier this year on our market, I suspect that was a shot across the bow, or a warning shot, let's put it that way, of potentially more volatility to come later this year and into next year. So yeah, so I don't dismiss that talk about a possible crack in the market coming later this year or possibly next year sometime. Right, then Louis asks about Pick and Pay. Let's do that quickly. So out of all of our retailers, this is one's actually looking the best at the moment. Well, out of the food retailers, let's put it that way. Some support here at about 74 Rand, which seems to have held for the time being, quite a nice, decent pullback over the last few weeks, and seems to be holding that 74 Rand area. So from a technical perspective, there's quite a lot to like here about Pick and Pay for the time being. I think it's, you know, I prefer this right now. I prefer it technically to ShopRite, for example. ShopRite has got a bit of a weaker chart pattern, and ShopRite looks also like it's coming down to visit its 200-day moving average now. Whereas if you look at Pick and Pay, it's a much stronger technical setup at the moment. So I prefer Pick and Pay right now over ShopRite. Okay, and then Sibanya, Alan asks me about Sibanya. Yeah, this is really just an awful looking chart. Nothing good to say about it, really, to be honest. I mean, that's just lower lows, lower highs. They're going after Lonmin now, which I don't know why they're doing that. I mean, that Lonmin to me is a business that just, I don't know how it's ever going to survive, quite honestly. Yeah, I can't get excited about Sibanya, I'm afraid, Alan. It's just not, it's an awful looking technical setup, and there's no clear support in sight that I can see anytime soon. So I would steer well clear of it for the time being. All right, that looks like that's all the questions. So I think if that is the case, Stuart, are you there?
Hi, Garth. Yes, I am.
So should we wrap it up then, or do you want to?
No, let's wrap it up for today.
You know what? Before we do that, sorry, I didn't answer the two questions on. The one question on Caterpillar and Boeing. Sorry, that was for Gerhardus. Let me just quickly do that, so that I'm not seen to be ignoring that, and then maybe we wrap it up after that. I'm going to just bring in my stockcharts.com. I always use this for international stocks that I don't have on my Metastock platform. So Caterpillar, let's just get that up quickly. I'm going to look at a daily chart, and I'll look at it over, say, 1 year. All right, so yeah, here's your Caterpillar chart. Yeah, I mean, for the time being, it's just relatively it's relatively range bound. I mean, $140 support at the bottom end, $160 at the upper end, and it seems to be trading within that range for the time being. So it would need to break one way or the other for me to turn more bullish or bearish. Above 160 becomes more bullish, below 140 becomes more bearish. All right, and then the other one was Boeing. Let's just do that quickly. Okay, here's the chart of Boeing. I'm just going to zoom in and make this 6 months of trade so I can see a bit more clearly what's going on here. There we go. I mean, I must say Boeing, it's very expensive on its valuation, but the chart setup, and you can't always go on that. You know, sometimes expensive stuff is expensive for a reason and it stays expensive. And you know, so that goes for this chart of Boeing as well. Overall, I mean, I can't really fault this. It looks good. It's the you know, recently higher highs and higher lows. It's broken through an area of resistance here at about $345 a share. Looks like it's making an effort to push back up to the 370 area where the prior high was. So that to me is, you know, it's a relatively good looking chart setup for the time being. I'd only become bearish or be cautious, let's put it that way, if it starts breaking underneath $320 per share. But while above there, I think it still looks fine. So yeah, that's that. All right. I think that's it. I'm just having a look here. I think Stuart, let's wrap it up there.
All right, thanks, Garth. Yeah, appreciate your time.
Good, thanks.
Yeah, thanks everyone. Sorry about the delay when getting started today. I will definitely be a bit sharper next time. Thanks again. Cheers all.
Bye. Thanks everyone.